Welcome to Trading Nation. Well, let's talk markets, specifically the huge bounce back that we've had. The S&P 500 on pace for its best week in more than 6 years. And bring in Monica DiCenso. She's Global Investment Specialist at J.P.Morgan Private Bank. Monica, it's a pleasure to have you on Trading Nation. Is there any chance that 2018 will be as good for U.S. stocks and the stock markets as 2017 was?
We are certainly optimistic, although that is not our expectation. We are looking for another great year in equities and still think you're probably going to see double-digit returns. But I think it's hard to imagine that you'll see a repeat of 2017. Doesn't mean we can't have very strong returns, though.
So good but not great would sort of be the theme?
Yeah, I'm looking for about double digits, so think 11 to 13% from here, which, of course, in context of history is very strong. But when you look at fundamentals, which is how we think about the market, it's hard to get to a number of 20, 25% just based on earnings growth.
Are you surprised by the magnitude and strength of the bounce back from the crazy week we had 2 weeks ago?
You know, it's been very interesting to watch. I think many times when you see a quick correction that doesn't feel like it's based on fundamentals, you should expect that you could see a bounce back. We thought it would take a couple weeks. Obviously, the market felt like this was a blip, and when you look actually underneath the hood, if you will, and again, you look at earnings growth, you look at the growth of the economy, and really you look at everything we heard from companies through this past earnings season, it's all been really good. And so I think once people settle down and the nerves passed, you realize that we're still in a very good underlying economy, and valuations, again, aren't stretched.
Or maybe the sell-off should not have happened in a sense that it was perhaps technical or caused by the risk parity trade unwind and volatility shorts coming unwound, that maybe it wasn't a normal sell-off in a sense that people simply decided that stocks are overvalued?
You know, I think one concern that remains in people's mind is what happens to interest rates. And in an environment, if interest rates were to move at the pace they did through January, if that continued through the year, that could be a headwind for equities. And so certainly the move we saw in January, I think, gave some people pause. But that is not our view that we continue at that cadence. And so in a world where you have the 10-year, even 3.5%, that's still very supportive of equities looking relatively very attractive.
Well, you're a global investment specialist. So, Monica, the best place to invest in the world right now is what or where?
You know, the past week, it was very interesting. We had a lot of interest in Europe, in emerging markets. I will say a lot of our clients obviously have a lot of exposure to the U.S. It's been the market to be in the last few years. It was really encouraging for me to see people willing to really take a risk and add to places outside the U.S. on this dip. And so we were very active both in the broad European indices as well as some sectors like European banks, as well as emerging markets. We have a lot of people who are bullish, just commodities in general, and I think that theme makes a lot of sense.
Monica DiCenso, J.P.Morgan Private Bank there, saying a pretty good year for the U.S. Hey, 11 to 13%. We could not knock that if that happens. Monica, pleasure to have you on Trading Nation. Thank you very much.
Thanks. Bye.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.